Hi friends, Bricky here, and today we're talking about FHA loans and how an FHA loan can help you save a lot of money when you're purchasing a home. Now, there's some information out there that FHA loans are bad and that you should wait and get 20% down so you don't have mortgage insurance, or an FHA loan is just for a first-time buyer. But an FHA loan is a lot more than that. And to help us break all this down, I've brought our good friend Brent from Unius Lending to come on and talk about how an FHA loan could help you purchase your first home or help you purchase your fifth home. So let's bring our good friend Brent in right now. So, hey, Brent, thanks for joining me today. So explain what an FHA loan is.
Well, it's great to be back, Lee. Thanks for having me. Yes, an FHA loan is guaranteed by the Federal Housing Administration. That's what FHA stands for. So it's basically insurance for the lender, if you will. And so by providing insurance for the lender experiences less risk involvement in the loan. And so that insurance, that FHA insurance, there's upfront mortgage insurance and monthly insurance. What that does from a lender's perspective is allows to offer lower interest rates, be more competitive, and help more of those people that have credit challenges, those types of things that make interest rates much higher in conventional loans, much more affordable for that particular type of investor or type of homeowner.
So why do people out there say that FHA loans are bad?
Well, this is a myth we'd like to bust. So eliminate. The FHA upfront mortgage insurance is 1.75% of the loan amount. Okay, so that is a higher cost compared to a conventional loan. However, it keeps you from having to spend 20% down. With just a 580 FICO score, you can put as little as 3.5% down, putting your homeowner into a property of their own much sooner than saving 20%. So that's a big difference. That 1.75% upfront mortgage premium, what most people don't understand, you can refinance out of an FHA loan and get a portion of that back. It's prorated back to you because that risk is no longer there if you transfer it into a conventional loan. The other part of the mortgage insurance, the monthly insurance, is set, and that can be eliminated with refinancing or selling the home as well. So it's it's a cost of doing business, basically, as opposed to waiting to save 20% down. So, running rough figures, a $500,000 purchase, 20% it was $100,000. Well, how long is it going to save the average home buyer to purchase a first home or any home to save $100,000? So it gets them in the game much sooner.
Right. And then there is mortgage insurance. So why do they charge mortgage insurance? Why is that important?
Yeah, it's important for them because the lender is protected. When the lender's protected, they're exposed to less risk. Because the lenders, you put yourself in the lender's shoes. Let's say someone has a 585 FICO score and they can lend on a $500,000 home and put the 97.5% of that. In other words, they're financing the majority of that purchase, versus someone that's coming in with $100,000 in a conventional loan for a $500,000 purchase. That risk is much lower on the conventional loan from a lender standpoint, because they're not going to walk away from someone that just parted with $100,000 to purchase that home. So it reduces the risk from a lender standpoint, and it lowers the interest rate. So a lot of times people don't understand this. There's a trade-off there. Because there's that insurance in place, interest rates are also lower on FHA loans almost in every case compared to a conventional loan.
Right. And that actually saves people money a little bit, correct?
Absolutely. And in conventional loans, they have mortgage insurance as well. They don't have upfront and mortgage insurance premiums, but they do have a monthly if you put less than 20% down on a conventional loan. And that rate of mortgage insurance is based on two things. The amount you put down is a percentage of the purchase price and your FICO score. So it's really important to compare an FHA versus conventional and not just automatically assume, hey, it's better to go conventional or better to go FHA. It's better to compare them side by side to see what the best, in a cost analysis, what will be the least expensive route for your particular situation every time to look at it. We look at it every single time, which will be best.
Right. And then I know that we've done this in the past many times where you've laid out a conventional loan and a FHA loan for a buyer and shown them the differences. And a lot of times, like you're saying, if they're putting down less than 20%, even though they're going to have to refi that down the road, it sometimes just makes a lot more sense to go FHA for them. So I think that's one of the things that you do is like you don't just like cram somebody in a loan. You sit down, you show them, hey, here's FHA at 3.5%, 5%, 10%. Here's conventional at 5%, 10%, and 20%. So you lay that out for them. Tell people why that the mortgage insurance has come down on FHA, because that happened like a year ago. So
Right. The monthly is 0.55% of the loan amount divided over 12 months. And that's how that's calculated. It used to be 0.85%. So the risk from the federal government's perspective dropped because there were fewer defaults, frankly. So that insurance, that risk was being eliminated as values were going up incredibly fast over, the period from say, actually from 2012 to current time. You've seen an appreciation rate that brought that risk down. In other words, property values are going up to a degree that they weren't experiencing those defaults, and that saving was passed on to home buyers.
A lot of misconceptions out there on FHA that it's just for first-time buyers, but that's not true. You can have multiple FHA loans. Explain that to folks.
Correct. Now, this is for primary homes. Let's be clear on that. So you can't buy investment property after investment property on FHA. However, if your intention is to purchase the home as a primary residence, let's say you live in it a year and you get transferred, or you'd like to turn this into a rental property and move on to another home, and your family's increasing in size, that type of thing, there's a need to move. You can get an additional FHA insured mortgage without necessarily paying off the FHA loan. A lot of times what we're seeing, it makes sense to refinance the departing residents into a conventional loan, sometimes because we can get rid of the mortgage insurance as they go on to their next home, and they can pull cash out, occasionally help with the down payments, things like that. But that's a strategy, again, case by case. But no, you're not limited to the number of FHA loans you have. I know a lot of people, as a strategy, actually purchased a home every 2 years for 10 years, and they own 4 rentals and a primary residence and had quite a portfolio in 10 years.
Right.
So that's a viable strategy. Absolutely.
Right. There's a misnomer out there that FHA loan is harder to get through an inspection than a conventional loan. And that's not really true. The inspection actually is looked at harder by the bank, but for the buyer, I think that's a good thing, because experienced buyers are going to go look at all these things also. And they're just not, most of them are not going to buy a house that have some problems that an FHA would flag, like windows or anything that could be hazardous to the buyer down the road. So explain that a little bit.
Yeah, that's the buzzword, a hazard. So hazard safety, those health situations, those are the things that an FHA appraiser looks at, and it is a different appraisal. An appraiser might be approved for FHA and conventional. Most of them are approved for both now. But yes, you're right, Lee. It takes a closer look at health and hazards, that type of thing. Let's say a guardrail for a staircase going out the back door is missing. An FHA appraisal will require that handrail to be placed on, so there's some type of support, someone going down 4 stair steps, that type of thing. We've actually had situations that exact thing happened, just dropped off 4 feet. That's not going to be approved by FHA. So it's better for the home buyer, frankly, to have those repairs made, frankly, before the closing. We had an inspection yesterday on a property, and there were 3 pages the inspector came back with on a new home construction. So it's good to get those things taken care of before. And there's on a new home, not the home. It's not a home builder we work with, Lee.
Right.
Yeah, I haven't talked about that. Man. You wouldn't have let them buy this house, frankly.
No.
So yeah, it was 3 pages long, and this is new construction. And so there are situations where the home buyer needs to be protected, and I think FHA does a great job in doing that. And of course, anything that comes up, we advise folks to have those repairs made. I know that you do that as well with all your buyers. You walk through, you have a construction experience, you walk up to a home, and you'll walk right out. I've seen you do it,
Right.
where, someone is purchasing something it's a problem, you can spot a roof
Yeah, and
problem.
then I don't deal with certain builders either, so
Right.
I'm very particular on that with my
Yes.
reputation. Sending someone to a builder that's just not doing a good job, and they're going to have problems down the road. One of the last questions is I get a lot of folks that read that they can get multifamily units with FHA,
Hmm.
and they can, and I know that's true, but explain what the problem is with that right now, because home prices are so high here in the state of Florida. And when you get in these multifamily, we ran in this with my insurance agent, who's a good friend of mine, and he was looking for multifamily on his VA, which is basically the same as FHA.
Right.
And it's just really difficult to get those extra units approved, and explain why.
Yeah, there's a self-sufficiency test that they run on FHA. So for the 2 to 4 units, in other words, a duplex versus a 4-family, those that range, and the reasoning being, first of all, if you have no management experience, they look at that, like that's a consideration. Or if you had management type of work in your work history, that helps, that type of thing. They'd love to see that, because you're basically becoming a property manager as well, and
Right.
running the expenses. And so what they'll use as a factor is 75% of the rents. In other words, let's say you're renting out the other 3 units for $2,500 a month. Let's say or $7,500. They're going to use 75% of that figure, the rents of that 7,500, towards income to help with the payment. In other words, that number, it helps, like you're saying, Lee, in the more expensive communities, it's hard to get that to work because the loan amount is such that it doesn't cover it. So
Right.
yeah, so they have to make up for it in the income, the W-2 income or self-employed income to cover the gap.
Right. And let's talk about loan limits, because there are some loan limits with FHA. So you can't go buy a $1.5 million house with it.
No, that's right. Conforming loan limits have increased substantially to 806,500. I mean, it's just crazy.
Pretty much every single year going up.
Yeah, they're going up. Like when I started in the industry, I think the loan limit was $128,000, Lee. So
Wow.
they've gone up quite a bit, over $800,000 now
But
for.
for Palm Beach County and Treasure Coast, they're about the same. Where are we sitting right now?
Yeah. Yeah. I think we're at 550. It's a county by county.
Right.
So we're well into the 500s on all the counties we work with, 540 range. So we're really picking up that middle ground, and even into the, not luxury, but into the upper end of the mid range pricing in the
Right.
three
Right.
counties we work in.
Right.
Mhm.
You can find a nice home for $550,000
Right.
right now still. And then another question that I know that's important is, some people have gone to get an FHA loan. They have the credit score, they have the income, they have certain, they feel like, all right, I should be getting approved, and they go see a mortgage company, or they go to their bank, and they get turned down.
Hmm.
Talk a little bit about this, because these are what's known as overlays, and folks don't really understand that.
Yeah. Credit overlays. They're set by typically credit unions and banks. They're notorious for this, where even though Fannie Mae, Freddie Mac, you'll get an approval. In other words, the loan can be sold into the secondary market. In other words, it's approved or conforming to the limits of, or the guidelines, conforming to the guidelines of the underwriting process. However, because the bank might be more conservative, they don't want to foreclose on one of their clients. Someone's depositing funds in their bank that they turn around and on a multiple can lend much more on it as far as against their savings. So credit cards, auto loans, they don't want to lose those customers. So they are more stringent in their criteria as far as underwriting guidelines. We have no credit overlays at all.
Yeah, and
So
that's because, and there's a big reason behind that. You're a mortgage broker,
that's
and
exactly right.
that it used to be, oh, let's go to a direct lender, but here lately with like UWM that you deal a lot with, which is the
Right.
largest mortgage company in the United States now,
Right.
and a lot of people don't know that United Wholesale Mortgage, they go directly through mortgage brokers. They don't
That's
work with direct lenders or banks. and you get a lot better deal over there, and you get a lot better situation. Speak into that, because that's
Yeah.
a big deal.
Absolutely. So if it's a bread and butter type of loan, we'll do things with United Wholesale all day long. It's the largest lender in the country no one's heard of, and we work with other investors as well that purchase our loans. We work on a wholesale basis with them, Lee. So in other words, they don't work with the public directly. They have one office up in Michigan, actually in Detroit area, and I'm going to take you up there with me. There's about 7,000 employees. I'm going to go up next. I'm going to actually go in February. I'll ask you publicly here. I'm going up in February if you want to go. But you spend a day there and you see their operation. It's absolutely incredible, the efficiencies that they have and how it's just an amazing machine that they've built there in the last 20 years. And we have other investors we work with that are a little smaller, but they'll do the really out of the box stuff where we closed a loan. We had a 527 FICO score with 12% down, and we're able to close that loan. And so we have no credit overlays at all, and that's the advantage of being a broker. And we're not set to any in-house lending guidelines at all. If Fannie Freddie will purchase the loan, it's a done deal.
That's great.
Yeah.
Well, listen, if you're interested in learning more about FHA loans, conventional loans, VA loan, Brent does it all. He's a mortgage broker. If you're thinking about getting a loan, he's a good place to reach out to. Also, if you have already gotten a quote on a loan, you're in that process, it's a good idea just to reach out to him and just do some comparisons, see what he can do for you, because a lot of times, because of the lenders and investors he deals with, he has the ability to really undercut the other banks and direct lenders because of just the aggressiveness of some of these investors like UWM. So his information is in the information section below, and you can definitely reach out to Brent, and he will help you any way he can and guide you in the direction that is best for you and your family. Hey, Brent, thanks a lot for joining me today on this. I really appreciate it. It's good information, and I hope that people take advantage of you and reach out to you and your knowledge, because you've been doing this for 25 years. What's going on. So thanks so much.
Thank you, Lee.
So I hope you liked this video. If you did, give us a thumbs up and like this video. I really appreciate it. Lets me know that we're making the right kind of content. Also, if you have any questions or comments for me or Brent, leave those in the comment section below. We're love to hear from you, and we also will answer all of your comments and questions. And then you can also reach out to me. My information is right there on the screen, or you can reach out to Brent. His information is below. Either way, we'll guide you in the right direction and help you make the right decision when purchasing a home. Also, if you're interested in real estate anywhere in Treasure Coast or Palm Beach County, my information again is right there on the screen. Also, if you have not subscribed, go ahead and slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours. Be kind to each other, and we'll see you in the next video.